What up, everybody? Welcome to the morning show here on Stock Market TV. Spencer, JC, Steve with you this morning. Got a good show. We will, of course, talk about the earnings, right? The Apple, the Amazon, the Intel. Yesterday was sort of a weird day for the markets. We'll talk all about that. And as far as the guest goes, second week in a row that our Friday guest has had to reschedule. So we've got Louie, because it's Crypto Fridays. We've got Kenny, because he's awesome. And we've got you and me and us, and that's the crew for the day. So maybe we'll do a shorter show. We'll see how it goes. I don't know. But what's up, Chad? How we doing? Smash the like. Let's get this show on the road, bring the guys on, and talk about these earnings, man. They're interesting. They really are.
All right, happy Crypto Friday.
Doesn't feel like a Crypto Friday.
It doesn't? What do Crypto Fridays usually feel like?
Usually they're running them on a good Crypto Friday, running them right into the weekend.
It looks like a dead Crypto Friday. Nothing happening today at all in crypto markets, which is fine. Not every day needs to be a volatile day in the crypto markets, does it?
Nope.
Do you prefer every day to be a volatile day in the crypto markets, out of curiosity?
Coinbase is really the news in crypto today, but we could
I'll tell you what, I think the bond market is the news of the day, not crypto, not the stock market.
What about the jobs number, JC? Is that the news of the day?
Are they still doing those things? They're still lying to you about these numbers every week?
That's the thing about the jobs number more than any other number, it seems like, is this thing gets adjusted so wildly from month to month. I haven't seen what the adjustments were for June yet, but it seems like every month they're way off with these numbers, right?
They're literally just making it up. The jobs numbers are like China. Like they sit around and they're like, all right, what do you guys want GDP to be? 7%? 7 it is. You know, like that's how it is kind of with these job numbers, right?
Crazy.
And then what I do like is that it helps keep journalists employed. I do like that aspect of it. We need more journalists. I'm a big fan of it. If these Fugazi numbers help with that endeavor, keeping journalists employed, I'm all for it. And if it can also help keep the economists employed, we like that too, by the way. We want the economists in there. We need the data. If all the economists just die or stop working, we lose the data. That's no good, right? We need sell-side analysts, so we can get that data, all these great contrarian indicators. If we lose that would suck, right? So journalists need them employed. Economists need them employed. Sell-side analysts need them employed. And if these made-up job numbers every Friday or every first Friday, is it the first Friday of the month? Is that what it is?
It's always the first Friday of the month.
All right. So if we got to keep making up these numbers to keep these folks employed, I'm all for it, right? Chat, can I get a witness? Let's get a hell yeah. Right?
I wish I had a hell yeah sound, but I don't.
Can I get a hell yeah, brother? All right.
I'll add it this weekend. That's good.
All right. All right. Let's do a little state of the markets. What do you say?
Yeah.
All right. Let's do it.
All right, folks, we've got the Dow futures down 500 points today. That's something you don't see every morning. They were selling off last night, so I guess accelerate a little bit after this number just came out. You've got the S&P 500 futures down almost 2%, 100 points to the downside for the S&Ps, just under 5,400 this morning. NASDAQ 100 futures down 2.5%, 470 points to the downside. For the NASDAQ 100 futures, 2.5% to the downside. Big move. And if you're wondering why is this happening, look no further than the bond market. 30-year bond futures up 2%, absolutely ripping this morning as interest rates are getting destroyed. 10-year note futures also up 1.2%. These are huge moves for the bond market, folks. Yep. For those of you who are not following the bond market on a day-to-day basis, usually you'll see 0.25%, 0.1%, 1/3%, 2% on a day. That's a big move. And you're seeing even oil getting hit today. This actually just They just knocked down crude oil, down 2% right now, down under 75 for crude. Copper hanging in there, okay, surprisingly so, up 1/3%, 410. Gold absolutely ripping, new all-time highs for gold, up 1.5% today, 25.20 for gold. Silver 29 and change, up 2.5%. The volatility index absolutely exploding, above 21.5 for the VIX as these yields get destroyed over in funny money land. Bitcoin down 1,000 points, 64,000 and change. Ethereum down 2%, 3,100 and change. Solana hanging in there okay, down 2.5%, still above 160, 163 this morning. Binance pretty much flat, 570. Total crypto market cap, 2.24 trillion. Spencer Israel, 56%, 56.5% for Bitcoin dominance. New 3-year highs there for Bitcoin dominance. What stands out? What stands out the most here? Russell 2000 getting hit. Any of these big reversals in these relationships, Strazza? Right, big reversals.
Just big reversals in the short-term trend since a couple weeks ago.
Even a couple of days ago, the relationship here between rates. Remember, lower rates were a good thing for stocks. Lower rates were lower rates were evidence of risk appetite we were seeing, right? That clearly has not been the case over the last 48 hours. Big change in the last 48 hours.
Listen, a single day doesn't make a trend, but bad things begin in a single day's price action. So what?
Not every big correction, right? Not every small correction turns into a big correction, but every big correction starts with a small correction. Is that the old rule of thumb?
So it's not that you want to overthink yesterday's action, but you also don't want to dismiss it. It wasn't good. I mean, they were just indiscriminately selling all the offensive groups, and there was a strange and different defensive bid than we've seen. Look at the action in the banks, for example. They had their worst day since we lost First Republic last year. I mean, they're retracing half of the move that began a couple weeks ago in 2 days.
How you say we lost First Republic? Was it ours? Was it ours to lose?
Look at small caps. Russell 2000 were pounding the table just a few weeks ago on the breadth thrust, the momentum thrusts. And then
all right,
continuation pattern out of that base is now failing. I don't think it's good.
All right, let's talk about what's driving. Let's talk about what's driving this. Throw up slide 2. This is it right here. Look no further. This I think is the biggest thing that's been happening here. Big rippers. These next 2 slides, I think, and the new slide 3, Spencer, as well. So here we're looking at U.S. bonds absolutely ripping. You're looking at Japanese yen absolutely ripping. These things have not been bad for the stock market. I think it's the rate of change. That's really what's the difference here. It's not so much the direction, it's the rate of change. It's not like the stock market. It's not about rising rates being bad for the market or falling rates being bad for the market. It's rates moving very aggressively, very fast in any direction is really what spooks the markets, creates a lot of unwinds. You know, these are not moves that you're seeing because of fundamentals. These are moves you're seeing because of positioning and unwinds in that positioning. And it starts here. This is it right here.
Yep. So yesterday, here I want to show the credit spreads too. I just dropped them in the chat.
Yeah, that's the next slide. Throw the next slide, Spencer.
I just updated it, but it didn't really change much.
This is it.
What do you make of that, JC?
So high beta, low volatility ratio. We talked about with Ari Wald earlier in the week, you know, thinking it would have already broken out. Not only did it not break out, it actually hit the lowest levels of the year yesterday. So this is the ratio between high beta stocks and low volatility in good, healthy environments where bulls are being rewarded. That ratio up above is making new highs. It's actually making new lows. And the other one is the credit spreads, right? You know, you're looking for widening of the spreads between junk bonds and U.S. Treasury bonds, you know, signifying that that volatility, right? That panic, if you will. That's what you're seeing. Here's another look at that, right?
So this is the most we've seen credit spreads blow out in a single day since I think January, hitting their highest level since early February. It's not good. Meanwhile, just look at the pre-market. They're just selling these things off again. Amazon didn't help.
And then here's the trade that just keeps on working, keeps on giving. Where is it? The trade that keeps on working, keeps on giving. Here's that slide 2, Spencer. Some people, they're not thrilled about it. They don't remember a time where precious metals did well. They're not used to precious metals doing well. They're used to precious metals not doing anything at all. Spencer, throw up slide 2 there. This is something that we talked about on last night's conference call. This is a big theme. These stocks keep working. More and more of them keep working. And you're seeing that today, which is interesting because I guess probably the yen ripping here and the dollar coming off a little bit is probably not terrible for gold. But nevertheless, gold absolutely ripping this morning, 25.21 for gold.
Okay. But JC, we should talk about stocks because these are now turning out to be tops in the AI stocks. It looks like we are really losing some leaders here. How bearish?
Like what?
Like what? The best stocks. So
what are the best stocks? Tell me what the best stocks. ExxonMobil just closed at the highest levels ever.
Okay.
Is ExxonMobil not the best stocks?
I'm not gonna do this then. Fine.
Do what?
It's okay. ExxonMobil.
Tell me more about the AI. Tell me why we need to worry about AI.
Then why don't we just call it the Qs? Is that important? Is that more important? Or XLK?
Yeah. I mean, yeah, you can. I mean, I think the Qs are important. Do you not think the Qs are important?
No, I do. I'm trying to see how I can bring this to you.
So look at slide 7. This is it. Look at slide 7.
XLK lowest level since early May. Selling these things a little bit differently than we've seen this whole cycle. No.
Do you think this is a coincidence, Strazza?
Nope. No.
You think there's something here? You don't think this is cute?
Nope. They all look pretty similar to this. So these are important, logical levels for a change in the leadership regime. I think we're seeing it. I think the big question is, does the same thing that happened when we were back here in March of 2000 happen again? And it's starting to look more and more that way. And that's what I would like to talk about. The damage to the tactical trends and now the primary trends in some of the leadership stocks and leadership groups. I think that's important to talk about today.
Yeah, I mean, I would argue they're former leaders, right? They haven't been leaders for some time. Financials took over that leadership, particularly from the large caps. Industrials took over that leadership. Healthcare, you can even argue materials. Like technology doesn't seem like a leader for a while now, right?
I don't really agree with that because XLK was at new all-time highs July 11th.
No, yeah, I'm not talking about on an absolute basis, but on a relative basis, just failed miserably to make new highs. I mean, on a relative basis, that peaked in January. Attempted to try to make a new relative high last month, failed. But that peak in relative strength was quite some time ago.
So tech peaked relative to the S&P on July 10th.
Yeah, no.
Okay.
That was just for a second. It tried to make a new relative high and failed miserably. You would say that was like a confirmed, continuation of relative outperformance, or just that last hurrah?
I just know big cap tech stocks were at new all-time highs on both absolute and relative terms a few weeks ago. And
for a hot second on relative terms, failed literally the next day. So I that's not leadership characteristics to me.
All right. Do we have earnings today?
Yes, we have. I was going to go there now.
Hold on, Strazza. Hold on. Let's stick with this because this is an important theme.
Hold on,
Strazza.
Yeah,
hold on.
I thought it would be an important conversation.
Hold on. Technology stocks represent a third of the S&P 500. They represent half the NASDAQ, right?
Yep.
So you can make a very strong argument that these technology stocks are the most important stocks in America. Would you agree?
I do. That's why I want to talk about them, what it means for people's portfolios, because they're selling off aggressively for 3 straight weeks now.
And for the record, the portfolios you speak of are people who have
most people.
Hold on. The portfolios you speak of are people with an overweight in technology and probably an overweight in U.S. stocks.
That's most people.
Has been the trend that's been working for most of people's investing careers because they haven't taken the time to look what happened before that, right?
You are so aware of how most people are invested.
Come on.
It's talk to more people than anybody I know.
For the record, it's my job to exploit their flaws. So yes, I very much know that they are very much overexposed to technology, and it's our job to try to take that money. I'm fully aware that Americans' home country bias is strong. I am fully aware that Americans' technology bias is strong. I'm fully aware that Americans do not own energy stocks. I am fully aware of all of those things, and it makes me so happy to know that that rubber band is so stretched and that unwind is going to be so nasty. And that's not my problem. My only problem is how I am personally going to profit from that unwind. And that makes me very happy. Doesn't it make you happy?
Yep.
All right. Well, since we're talking about tech, we should probably talk about the things that are going to be driving tech today, right?
Bonds.
What?
Bonds.
Okay, no. Yeah, sure, that too. But also,
That too.
you got a real
$130 trillion
fundamental
market.
event.
Is that not enough for you?
You got a real fundamental event yesterday. It's called earnings. It happens 4 times a year, right? And 2 of the biggest tech companies in the world, right? Apple and Amazon. Let's start with Apple. Here's my Apple chart. There it is.
Amazon's a consumer discretionary stock.
Yeah, but it's what I
Apple,
mean.
And by the way, and for the record, Apple is now only 4% of the tech index. It's no longer the 22% weighting it used to be.
Yeah,
It's actually not an important tech stock anymore, and Amazon isn't in the tech sector at all.
It is important.
But to Strazza's point, Qs, right, Strazza?
Listen, all of the Mag 7 stocks are coming out and beating earnings, and all of the Mag 7 stocks are no longer being rewarded for coming out and beating earnings. This is a change in character.
Good.
That's true this morning because Apple was down like what 1.5%, and their numbers were pretty good across the board, right? I think every unit either beat or came in at expectations.
Amazon missed on revenue. Other than that, I believe all of the Mag 7s, and I don't include Tesla because it should never have been a Mag 7. So all the other Mag 7s have beat on both top and bottom line. Stocks are going down.
Amazon did miss on revenue, but if you look at their history, they do that. They do that somewhat regularly. They come in below that number, so it's not like unheard of for Amazon
when it happens. Right? That's the important point here. That's the takeaway. It's the way that the market is reacting to these reports that, like you're saying, I'm not disagreeing with you. Amazon's report wasn't bad. It wasn't out of the ordinary. They missed revenue a little bit. Okay.
Yeah. Right. Exactly.
Is what I'm trying to say. That's a little bit different. No?
Yeah, I mean, Apple's getting, what's it down, like 9% this morning? I saw this chart going around yesterday on Twitter. This is the chart that everyone's talking about. Hey, Apple actually had sales growth. Look at that.
Apple's down 1%, less than 1% this morning.
I know.
I don't know where you're getting that data.
No, I said Apple's down 1%.
You said 11. You said like 10.
No, Amazon's down like 9.
Amazon is down 10%.
Yeah. Yeah, Apple's down 1, Amazon's down like 9. Anyway, I also wanted to, show this chart, which I thought was fun. This is from JP Morgan. The top right chart is the number of people worldwide that have an iPhone. And that number has doubled in the last 9 years. Literally doubled. That's insane. And it's still only 1.4 what is that? 1.4 billion? There's no trillion. I don't know. That's billion. That's billions. 1.4 billion. There's so much more room there. Anyway, here's the Amazon chart. Like I said, down 9%. This does not show that, obviously. Amazon's report was, again, it's Amazon. They tend to do this. They tend to come out and give like cautious short-term numbers when they have the bigger picture in mind. AWS is fine, right?
Yeah.
Whatever.
Apple's report was good too. It's just the company trades at 30-something times earnings at this point. If you're not going to grow your revenues, it's going to be hard for your stock price to keep going up forever. So 3.35 trillion market cap. I don't know. No revenue growth. I don't know.
I'm a big fan of the puking that's taking place here in terms of sentiment. This is really, really needed for this market. If you throw up the first few slides there, Spencer. We can talk about this coming in.
Yep.
Well needed sentiment correction here. It was getting a little frothy. So this is a good one. Bigger picture. I don't think it gets a lot of love, Strazza. Let me know what you think of it and be brutally honest.
Yeah.
This is the consumer sentiment survey, and it is very slow. Like so slow. So the AAII, which is the American Association of Individual Investors, is very erratic, very fast, very emotional. The one that moves the fastest. This is arguably the one that moves the slowest. So it's kind of like looking at a long-term secular chart just to kind of get perspective and kind of just bigger picture. People, are gloom and doom about the economy and they think the economy sucks and everything, which is great, right? That's a good thing. We want people to be angry and very sad. That historically is a very good thing for the stock market. Now, looking shorter term, go ahead. So now looking shorter term, we're looking at these are the newsletter writers. Newsletter writers are the most bullish they've been in 3 years, right? Now, granted, you need bulls to buy stocks to have a bull market, to be fair. So from a timing standpoint, extremes in optimism is rarely a good reason to sell stocks. However, the market needs a sentiment correction. I mean, that is just the bottom line. It doesn't have to happen today. It didn't have to happen this week or even this month, right? But the market needs a sentiment correction, right? So here, newsletter writers, and I think we're seeing that. Go ahead, go to the next one. Here's the American Association of Individual Investors, ahead of the curve, right? Already sentiment is coming down from these individuals, right? These much more erratic than other surveys, much more volatile, much more emotional, already mean reverting here, individual investors. This probably accelerates that process. You can go to the next one. Look at market vein. These are the CTAs. CTAs, the most bullish that they've been in, a good half decade, right? Again, looking for that sentiment shift. If all the CTAs are bullish, is that probably a good thing? Probably not, right? Looking for that correction there. And then finally, and this is the best one of all of them, this one aggregates all of the sentiment. And as you can see here, the lower it is, the more bullish people are, the more risk there is in the market. The higher it is, the more pessimistic people are, the more bullish it is for the market. As you can see, we are at extreme levels here, right? Extreme levels of optimism, right? So looking for that reversion in sentiment, a nice little correction here in these tech stocks that people own way too much of, I think is a great way to smack people around, have them puke out at the lows, classic bull market behavior, and then the bull market resumes. That's how I'm seeing this. Very very timely, very timely.
I don't know how timely it is. I can't believe we're talking about sentiment polls right now. With banks having their worst day in over a year,
Regional banks are down 3%. Who cares?
What?
Regional banks are down 3%. Is that a big deal?
Yeah, but
nothing to see here. Nothing to see here, people. Right. Nothing to see here.
Okay.
I don't know. The Dow's down 1%. Regional banks are down 3%. Bonds are off their highs. 10-year yields are 10-year bonds are down less than 1%, or excuse me, are up 1%. I mean, is there? So there was you got the VIX above 20. Yeah. So I really like Sean's iron condor. I really like selling that volatility. You don't?
Listen. So there was a panic among traders yesterday. This is important to know. I reached out to somebody who literally just spends most of his day talking to trading desks at hedge funds and institutions. Good friend of mine, friend of the guys as well. So I reached out. I said, "What the hell is going on?" Because it didn't make sense. I got so many phone calls.
Give me a clue. Tell me later.
We ate steak together.
You know who would have a good read on this? Wait, Steve, I want you to finish, but also Kenny would have a good read on this because Kenny's in the weeds here, right?
Bring him in, and I
want to finish the story. What did he say, Strazza?
Kenny's in the weeds. Okay, so what he said was, I said to him, "Why is this like? I don't understand. What are people saying, right?" What was I talking about? We all thought, or bulls all thought, if interest rates come down hard like this, it's going to be a party for risk assets, right?
I thought so too. Not hard, slowly. But yes, I would have said yes. That's me.
A lot of smart people have been saying it. It's okay. We get things wrong all the time. So people were confused yesterday. Naturally, rates are down big. Why is everything getting killed? So said, what are people talking about?
Because they were down big, not just down.
Soft ISM. Apparently, it was terrible. It was really bad. Now you're hearing hard landing stuff. Not a good thing. People don't want the hard landing. They want the soft landing or the no landing, right? So that happened yesterday. On top of it, you had the political stuff. I don't know about it, but there's a flippening between Kamala and Trump. I think that could have something to do with maybe, I don't know, the price action in the banks the last 2 days.
Well, that's uncertainty right there, right?
The war stuff in Iran, those headlines are going around. People are talking about that. He also said, I don't know if you heard this, Spencer, that a number of people called him about the Wayfair earnings call. Wayfair was making, I guess, drawing.
Yeah, I saw the headline. I saw the
missed it.
headline. They likened it to the Great Recession, which like
Wow.
they're not the only retailers that say things like that. The restoration hardware guys
Who shops
says
at
crazy
Wayfair?
shit.
So they're depricing the Trump stuff. Okay. We got a war thing going on. We got now economic concerns about a hard landing. People are saying crazy things on earnings calls.
Who better to talk to than our biggest
The shooting
bear
leaders.
friend?
Bring on the perma bear.
All right, the perma bear.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick. The Dow Jones Industrial Average just closed at the highest levels ever a couple of days ago. And a funny thing happened over the last 48 hours. Everybody's crying and panicking and scared and just like everybody's freaking out. I want to know what we're buying.
I'm not buying anything unless UVXY is under 30 today. But let me just cut to the chase. Yesterday might have been, other than May 31st, yesterday was the #1 trading day of the year. You had a blatant reversal and something you just don't see. UVXY held prior day VWAP, went green, and rallied and engulfed an entire 3-week down move.
Engulfed.
So yesterday was probably I don't know if you guys came in expecting the market to sell off, but if you're just watching price action and putting all the other conversations aside, the whys, again, as the bear here, I don't need a reason for why the market's selling off. I got thousands of them, as a bear, again, Middle East enough keeps me out of equities because I'm just waiting for World War III to start.
I mean, Jersey enough is going to keep it.
Exactly. But UVXY, any strength in this, I affectionately call it a garbage index or ETF because it's built to go down. So when it's this strong, that's Nancy Pelosi buying S&P puts, cashing out of her portfolio. You're going to get the alert a month from now. That's her. You don't see UVXY do what it did yesterday, and you cannot sit idly by. You need to short things. You need to dump your portfolio. You need to go screaming for the exits. I don't care. Panic is good every once in a while. And yesterday it was telling you, get the hell out of the market. And then we just gave back the entire QQQ move and then some. So I am not buying anything unless UVXY is back below $30 today, and it's at $32.50 now. But listen, if you want to scalp longs, it's already, the manipulation of this market is so blatant. Look at the Qs, 347.50, bang, that's where it stops. So you got the whole world's coming to an end, but yet 350 gets you 347.50. That's where it holds, and it gravitates back to VWAP at 350. The whole market's rigged. All of this is priced in. It'll blow over also, but right now, I got to think we're going back to those May 31st lows, and I'm not going long this market unless UVXY not only gets disintegrates, but it needs to go negative. I need to see it below 28.79 today, and then we can have one of those rip your face off rallies, which will be awesome. For me, I am not building portfolios right now. I am looking. This is a day trader's dream. I waited for this. I was, after that month of June, sitting here on my hands when everybody was making money in their portfolios. Makes me sick. All right, this is what I love. So give me some dips and rips and rolls.
Couldn't agree more, Kenny. I love the fact that everybody's so scared and crying. Oh,
I
but
love
then they get that NASDAQ. Oh,
I love it.
I was irresponsibly long the NASDAQ this whole time, and it was working out so well, and now it isn't. Oh.
And you know what? Listen, I think the top might be in for the year. I'm not going to say 505 is going to be the top for the next 18 months. But again, right now, it feels like that capitulation that we had, the blow off top that we had intraday after one of the economic reports. I think it was, I think it's on my 30-day chart exactly where it was, but it was 505 and change. So there it is. And we had a blow off top that morning, and that really signaled, okay, the market might have put a top in. And then when we couldn't get back above it, we started to see the sellers were outweighing the buyers. And now everybody who didn't sell then is like, oh, do I sell now? I think the Qs could go down another, 16, 17 points from here, and then we'll see who's boss.
Let them go to zero.
Right.
What I'm thinking here, and are you doing this? What I like to do in these environments when everyone's crying, I like to look for the relative strength. I like to look for the stocks and the sectors that are bucking the trend in this panic selling. Dow closed at all-time highs like 3 days ago.
Right.
This panic selling where the world's coming to an end, and the war and the Harris and the ICM and the this and the that and all those things, right? Like, just the more the merrier. What else can we be angry about today, right? I love that. I want to see the relative strength. I'll be a buyer there. We've been seeing a ton of relative strength in energy stocks, particularly with the selling pressure in energy. So that's front and center. Seeing some of that in the materials. I'm surprised copper's not down. Copper's up 1% today, by the way. So that's what I have in mind. Also, volatility, fading volatility here. People crying. We want to give the people what they want. They want to buy insurance now, not a month ago when it was historically cheap levels. They want to buy insurance now. Beautiful. We can sell it to them, right? That's what I'm trying to do here.
Right. Well, listen, that's normally my game too. So I'm usually a seller of the UVXY on these extreme days. So like I said, if it doesn't go away, if UVXY stays strong today, especially on a Friday in a bearish moment, again, I'm not saying it's a bear market. I don't care if it's a bull market or bear market anymore. We're day traders. We're just looking to get paid for today. It doesn't matter. But if UVXY stays strong, we're going to get annihilated into the close. Like, there's going to be a no bid lock limit close freak out session. And I'm looking forward to it, because if UVXY doesn't go away, and right now it's up 375, and if Apple doesn't save the market and this thing breaks back below the 212.50 that it held in the aftermarket yesterday, we're done. We're going, the Qs are going down another 8 from here, and it's going to be awesome. So I'm looking forward to it. And then, what I really want to see is, let's capitulate all the way down to 338 right at the open, down another 10, and then bounce from there 7 or 8 points. Let's get
one more thing I want to remind everybody. Kenny just talked about how this is a day trader's dream. To add to that, it is a Friday in August. So the moves, the low liquidity moves that you should expect on days like today are likely to be more violent than they would if this was a Tuesday in September.
Right. Exactly.
Right. So just remember what day today is. Yes. What day is it today?
Right. Friday fear day. I'm telling you, man.
Friday in August. Funny things happen Fridays in August. So pay attention. That's it.
Yes. All right. Good luck.
All right,
guys.
Kenny, we'll let you run.
Get me in the room. You'll see us do this live. So it should be fun.
Go get him, baby. Go get him.
Thebid.com. Link is in the chat.
You're telling me JC's annoying on days like this. How do you want me to? Do you want me to cry like the rest of y'all? You want me to cry about it? Oh, but then the ISM wasn't so nice. My NASDAQ stocks. Like, you want me to cry about it? Like, what do you want me to do? Like, I don't give a shit. Like, I'm here to make money from this scenario. Like, you guys panicking and buying insurance now, not a month ago, now, sold to you. Sold to you. Iron condors all day, baby. Let's go. Right? Tell them, Spencer.
All right. Well, let's take a quick intermission on the panicky stuff or not panicky stuff, and let's talk about crypto for a second. All right. It is Crypto Friday after all.
Avocado and toast, leather seats, jet plane, always ready to go.
Morning, guys.
Oh,
perhaps
the
one of the most. I gotta say, this is perhaps one of the most entertaining episodes I've ever watched. I feel like Strazza's his head's just blown up right now just listening to you.
Strazza is currently banging his head into against his desk. Yes.
I want to be selling volatility because I find it hilarious that now people want to buy insurance. Why are they buying insurance now when it is exponentially more expensive than a month ago when they could have bought it for nothing? You see how that works? You see how dumb people are? if we are not taking advantage of other people's stupidity.
Yeah, but you can understand. You can understand, JC, why a month ago nobody wanted to buy insurance. Surely you can understand that, right?
Yeah, no. I don't get me wrong. I
Yeah.
understand the
Okay.
human flaws. It's our job as market participants to extract money
Talking
from those human
circles here.
flaws. Right? No, I get it, Spencer. I get it.
Okay.
Yeah. Of course, I get it.
You can appreciate that when it's raining, people don't go to the beach, and vice versa, right? Like, you can just appreciate.
I feel like there's a lot of tension here. I think we should just take a moment to pause and just get our breath here. You know, there's a lot of drama this morning.
Is there?
What I want to pay attention to is, I mean, obviously I'm in crypto, and Bitcoin isn't really doing all that much. Like
Right.
Bitcoin's
It's not doing anything. Right. It's actually holding in pretty good.
like that's really surprising, right? Like particularly, I mean, I look at a lot of crypto. You guys are definitely more equity focused than I am, but with all this panic going on, it's surprising to see something as high beta as Bitcoin and crypto holding up. You know, surely there's definitely been a lot of sell pressure over the last few weeks in some of these altcoins, but nothing panicky. It's, you know, Bitcoin's holding in just fine.
Look at these cycles. Louis, I mean, listen, I don't know everything, far from it, but man, this one looks like those other ones. No? I mean, is it that simple?
I think so.
You think so?
I agree with you. You
We're
know,
not being over simplistic here.
no, not at all. I mean, you know, I really like it. It's just when everyone's emotions are so crazy right now, it's really interesting psychologically just watching this morning and just seeing, you know, watching the chat, watching you and Steve and Spencer going at it. It's just interesting, just psychologically. And so it's just really refreshing just to zoom out and get some of these longer term looks. Yeah.
I guess diverse insight asking me how much money I made shorting back in March. I didn't short anything in March. I bought some puts. We had some puts in Lululemon and Apple. Those worked out well. We had some puts in some indexes that didn't work. So some stuff worked out great. Some stuff didn't work out at all. I don't know what that has to do with now though. But no, we didn't short anything in March. Nevertheless, in March you did have that breadth deterioration, which was a good reason to be putting on bearish bets, which is why I was doing that. And you had months and months go by without any progress at all in almost every stock, right? And now you're getting breadth expanding, you're getting breadth improving. So I don't necessarily want to be selling rips. I want to be buying dips in this environment, right? That's how I'm looking at it. I want to be buying dips in this environment. I want to be selling volatility when people are buying insurance now. Now they're buying the insurance, not a month ago. They're buying insurance now. So we want to sell that to them, right? That's what we want to do, right?
What I just quickly want to just talk about, seeing as it's Crypto Friday, I feel like it's necessary just to talk about crypto just briefly here. I mean, I don't really see a whole lot of panic here in crypto. You know, I think the higher conviction and the higher probability outcome is we form this higher low here, and we work towards the former highs. I mean, nothing's really changed. The trend is still higher. Shorter term, it's messy. I get it. You know, if we do get a continuation of this panic selling in equities, then sure, all bets are off, at least in the short term. That's fine. But the long-term trend hasn't changed, and it still makes sense to be placing bullish bets with a longer-term time horizon in crypto markets.
How do you know when this is it, Louis? Is it going to be a weight of the evidence like Bitcoin's making new highs and other stuff is too? Do you have something more specific that you're looking at it, or is it more like a broad situation like I'm looking at it?
Yeah, I think it's really just a broad. I mean, clearly you have to pay attention to what's happening in equities and what's happening in the bond market. Bitcoin isn't going to be breaking higher if, you know, credit spreads are just blowing out, and so you need to have an environment that's conducive to that. You're not getting that at the moment, clearly, and so I just think some further chop here in the short term is the likely course of action. But I think it's just patience and just allow Bitcoin to set up and work back towards those former highs. So just,
Can you throw up the next one? Can you throw up the next one, Spencer? The Solana, because this one has really been front and center. Strazza has been pounding the table about this one, rightly so. The relative strength has been off the charts. The Solana ETH chart in particular has really stood out. Solana BTC chart has really stood out. It's the numerator fallacy here, right? It's the Solana part that keeps driving all of these ratios. And this is the first real completed cycle for Solana. So the last time when Bitcoin completed its first cycle, it went up 12x after that. In the next cycle, it went up a lot more, but just in the next cycle, it went up 12x. Solana doesn't necessarily have to go up 12x. Strazza and me actually agree over Louis. Louis was fighting us on this. Me and
I was the more conservative one. You guys were making the bet that it's perhaps even likely that we're going to get a 12x in Solana by the end of the cycle.
No.
Or that it's a probability that's worth waiting.
We were emphasizing, both Strazza and I agreeing, emphasizing that it is very much on the table to get a 10, 12x in Solana. Not so much that we're betting on it or that we're saying that's definitely going to happen, but you're like, it's like a crazy outside chance. We think it's an outside chance too. Bring Strazza back in. We think it's an outside chance too, but I really think that that's on the table. $2,500 Solana, that's on the table.
Yeah, and that's bullshit. You know, we didn't say that. We just said you can't count it out in a bull market for crypto.
What I said, it's the responsible thing to do. And look at Strazza agreeing with me. See that? It does happen.
I don't want to.
Thanks, Louis. Look what you did.
Listen to me. We have to invest as portfolio managers, as investors, whether you're doing it professionally or for your own money, it doesn't matter. To go into this market and approach the marketplace thinking that a 12x in Solana is off the table, I think that's foolish. I think we need to approach the market thinking that that is very much a possibility, particularly with the relative strength, particularly how early it is in the lifespan of this particular currency. It's completing its first cycle now.
Yeah.
I mean, there's a lot of things pointing to this could just be getting going. Now, we haven't got a breakout yet, so this is a big, there's a big nothing burger so far. Nevertheless, the relative strength has been there, and Strazza and I both agree. I think it's absolutely on the table.
Throw up chart one. Louis hates these charts, but this is why we're saying this. We're not just crazy laser-eyed people. So back in 2020, after Ethereum broke out of its base, it then went on to rally, I don't know, almost 1,200%, 1,170%. Was that 12x? I think that's about 12x, isn't it? So we've seen
what I've done here, and all of this drama and all of this tension, I've managed to make you guys agree. I've just done the entire chat. Big
Louis, contrary to popular belief,
of you,
Strazza and I agree 99.9% of life. Strazza and I agree on. We disagree on a few things. You know, he likes to eat sandwiches in the morning for breakfast. I think that's dumb. He thinks that's a great idea, right? Strazza likes to smoke that thing. What's that thing that you smoke? It's like the thing that you put the battery in.
I had oxtail for breakfast yesterday. You would have been proud.
Wow, that's bougie.
Very aggressive. Very aggressive.
After the show.
You know what's aggressive? Vicky here saying that Vicky's getting pissed off because Vicky is here looking for clarification to see if you should be selling. Let me make this perfectly clear. Hold on,
Vicky. No, she's right. She's right.
We're doing a good job today.
This is going to be entertaining.
Vicky, you ready? I don't give a shit what you do, right? I don't care whether you buy or sell. I don't even know what you're talking about. Sell what?
If you want, no, stop. Because if you want to come on here and spend an hour and a half of our lives every morning talking about markets, let's talk about markets. I'm
telling you what I'm doing. I don't know what Vicky should do. I don't give a shit what Vicky does. I'm telling you what I'm doing. I am looking to buy stocks today. I am looking to buy the relative strength in the names while people are crying about, oh, my NASDAQ. I am buying stocks. I am selling volatility. People want to buy insurance today. Fuck them. I will sell the options premium to them.
That's what I'm doing right now. Go sell some puts. What do you want?
The market is not open. I don't know if you live like in Africa or something, but here in the United States, the stock market opens at 9:30, and I will be acting accordingly. So
For-
yeah, that's in 14 minutes.
For
Yeah.
the record, Vicky, I care about what you're doing. Okay,
I couldn't care less. what
we're
Vicky's
not
doing.
all cold, heartless people. Okay,
I don't understand why I have to care what Vicky's doing. Why do you care? You don't even know Vicky.
because she's here with us. I'm interested.
You
I don't
care
really-
what she does with her portfolio?
I'm interested. She's here with us now.
I do want to have a constructive debate about the price action that we're seeing.
What are we seeing? We're seeing the Dow at the highs of the day.
Like Vicky.
Dow Jones
I
Industrial.
feel like I'm
Global
just taking a
Support
step back.
Index,
I'm just like
highs
watching
of
my
the day.
parents argue right now.
Highs of the day. AMD just turned green. According to Steve Strazza, Chief YOLO Officer at All Star Charts, AMD is a big deal.
Yeah, and I got YOLOs. I got calls that are expiring today. I got things to do, and you're sitting here showing me sentiment polls.
Yeah, I don't have options that expire today. That's not my problem.
I
Yeah,
know.
I'm showing you sentiment
Very
polls
clear.
because
I know.
we are. Hold on. We
all can tell.
are at extreme bullish readings in a lot of these sentiment polls, and a good old fashioned panic when people are crying over I don't even know what, like ASM, whatever, the Powell guy. I don't know what people are crying about. It's a whole bunch of things. There's a war in the Middle East.
There was real
I
serious
can't believe
selling.
there's a war in the Middle East. I can't believe it.
There's serious hardcore selling happening today.
Is
Right.
it? Why is it down at the highs of the day? Why is copper up 1%?
What tech stocks should people buy right now? Right?
JC,
There's blood on the streets, right? Let's step in. So, like, what looks good? You want to step in and buy this thing? You don't want to
JC wants to step in and buy Intel, I think.
I want to
We're
buy
down
relative
25%.
strength. I want to buy relative strength. By the way, speaking of Intel, our boy Todd Stone threw out
bad.
threw out an interesting stat yesterday. Intel's like 50 basis points of the Dow right now. You see that?
God.
So we're not buying Intel. Just to clarify something.
Tech is not a leader in this market. I don't know if you guys didn't
I
get
don't
the
even know
memo.
anymore.
It's not the leader in the market. I want to buy leaders. I want to buy rotation.
And when did that change?
For the rest,
Like,
at
you
the
were
beginning of the
so
year.
ahead of this as
At
of
the
what?
beginning of the year. I have been pounding the table on industrials and particularly transportation stocks, and the relative strength has been there, and I will be buying those today. Which ones? The ones we talked about last night. By the way, you like what I did last night? You like what I did? Do you watch?
I was watching Simone Biles last night. She's incredible. I mean, just like
Who was that?
amazing.
You don't know who Simone Biles is?
Louis, Olympics.
Louis,
You have the
get your
Olympics
shit
in New
together,
Zealand?
all right? Get your shit
She's the
together.
tiny one that does all the
Biles
flips.
is a stud.
It's just, I mean, I could cry watching her. It's just so beautiful.
Yes,
So
I
let me
agree.
fill you in on what I did yesterday because I'm so gangster. First of all, nobody goes through the stocks in the Dow Jones Industrial Average.
Oh God.
I did. But you know what I did before I did that?
If you say
You went through the transports.
I went through the transports before the industrials. Tell me
Yeah,
that's
okay.
not
Stress is
gangster.
out of here. Yeah.
Tell me that's not gangster. So not only did we go through the Dow Jones Industrial Average stocks, we also went through the transports. Not only did we go through the transports, we went through the stocks that I think should also be in the transports that aren't in the transportation index that also look good. You got these railroads in Georgia. You got truckers in Illinois. Nobody wants to talk about them because they're busy crying about their Apple or whatever. Dude, this is a bull market. This is a bull market. In bull markets, you buy fucking stocks. That's what you do. You buy dips in bull markets. So guess what I'm doing? I'm buying dips in the goddamn bull market. And if you don't like it, then tough shit.
That's a good summary of today's show right there. That pretty much sums up the entire sentiment in a nutshell, or at least JC's sentiment in a nutshell.
Go watch the video from yesterday, Al, on exactly what we're buying. Truckers in Illinois, railroads in Georgia. Let's fucking go.
All right. Hey, Louis, thanks for hanging out.
I'm taking a step back. I'm gonna go to bed. You guys continue with this.
Thanks, Louis.
I'm sure Jason's gonna have fun. So
All right.
I'll talk to you guys later.
All right. I don't even know what to say anymore. I just want to give you the numbers on Intel because it's so bad. It's down. What is it down at? 25% this morning. I don't think we have a chart, sadly, but this was like straight up like kitchen sink quarter. Everything was horrible. Pretty much their earnings per share missed horrifically bad. Right? They made 2 cents per share last quarter versus a 10-cent estimate. They're not paying their dividend in the fourth quarter.
This company is in trouble.
And everyone else
Yeah.
is expanding CapEx except for Intel.
Dude.
Their CapEx is going to decline. They're laying off 15% on their workforce. It was just a kitchen sink, everything bad.
5 years ago, there were Intel chips and everything else. Still, just 5 years ago, right? The stock chart still didn't look good, right? So thank God for price. The writing was on the wall. But there were Intel chips and there was everything else. They were still the leader. They picked fights with AMD, Micron, Taiwan Semi, let NVIDIA do all the cool shit while they were looking the other way. And now look at them. All of those companies are now larger while Intel slowly crashes to zero.
Can I just say that I am as surprised that Intel still sucks as I am that there is violence in the Middle East. Like, isn't this just another day? This is just another day, guys.
The most well advertised drop in history. This chart's been bad on a relative basis for 20 years.
Yep.
More.
Intel sucks. There's a war in the Middle East. People are angry about who the presidential candidates are. Like, is this just not another day?
Don't forget Snapchat. They also suck. Down 20%.
Lindsay's daughter. Shout out Rachel Lindsay at the Portfolio Accelerator in New York. Remember?
Yeah, she said that.
Yeah, she did say.
Shout out Howard Lindsay's daughter. Shout out Rachel. Absolutely nailed it. She's like, I told Dad, nobody uses it anymore. Sell all of it.
If only Howard listened to his daughter more.
If only Howard listened to Rachel. Can we get Rachel on the show? We should get Rachel on the show, and then we'll just rip Howard for half an hour. We should do that.
It got Snapchatted again.
It got Snapchatted.
It did. Yeah. It's a tradition at this point for Snapchat to get killed on its earnings report. It happens.
Let me get this right. No matter how poorly this man does running this company, which he's demonstrated for years now that he literally can't do it, he can't leave.
They had that one amazing quarter, and then other than that, it's been.
I know. So he's CEO no matter what until the day he dies, kind of thing.
I think he's
air structure.
I think it's a similar. Yeah, it's a similar thing to Facebook or Meta, where he has
Isn't this the guy that married the Victoria's Secret model?
Yes. But he has like all the voting control.
He is such a dweeb. I don't know how he married a Victoria's Secret model, and also he has no idea how to run his own business. They're going to try to push him out. I don't know what that's going to look like, but he's blowing it. It's terrible.
Listen, I don't think we've pissed enough people off today. Can you throw up slide 12? Let's just really stick the dagger in them. Let's just really stick the dagger.
I don't know what this is. What is this?
Flippening. I know what he's going to say.
Let's really piss people off today.
I have thoughts on this.
What's the difference?
I don't like this chart, JC. I don't like this chart.
So this is the Harris flipping the Trump, right? So these are election betting odds. So this is predicted, which leans left. We know that. Nevertheless, for the first time, it's got Harris winning the presidential election over Trump. The stock market has sold off dramatically since this happened. Whether it has anything to do with this or not, I have no idea. What I do know is that the market hates uncertainty. And the market was cool with the Trump. You might not like him. You might hate him. The market might hate him. It doesn't matter. The point is the market knows what it's getting with the guy. If the market doesn't know what it's getting with Harris, because why would anybody know what she's thinking, right? And the market doesn't like that. So just understand that. But go to the next one, which is
hold on. If you really wanted to prove I agree with you about the uncertainty. If you really wanted to show the uncertainty point, then you would zoom out on this chart like 3 weeks, right? And you would see right now what is this? Is that a 5-point spread, 5-cent spread?
Yes.
That might as well be zero. 3 weeks ago, the spread was super wide. It collapsed tremendously. So this might as well be no spread at all. The flipping doesn't mean anything.
It's a 10% spread, Spencer.
The flipping doesn't mean anything. The spread's been narrow for, as you can see, a week now. That's what matters.
Question: who the hell thinks she beats Trump? Hundreds of millions of dollars worth of bets is who it is. Can you throw the other one up? The next one, please. So poly market leans right. So just understand the biases here. Nothing's perfect. Even these sentiment polls that we look at, they're not perfect either. We understand the way that they behave. We understand that poly market leans right. Predicted leans left. And poly market still has Trump a far winner.
But isn't there an ARB there then that should
Look
get
at
cleaned
the
up
spread.
if these are
God
actually
damn.
active markets?
These are active markets with a lot of money in it. So these aren't like, pike or penny stocks. Like there's real money here.
You get what I'm saying? How are smart people not arbing this out then?
Maybe they are.
Maybe we
Yeah.
should.
Billy, I don't have any bets here. I don't have a horse in the race. I'm just sharing the data. I'm with you, Billy. It's a lot of this is silly.
It's not
These are
about
facts, guys. These are facts.
It's not about the odds. It's about the spread. The spread's collapsed. If it gets wider, that tells you all you need to know.
I think it's worth watching. I don't think it's a coincidence that volatility spiked on some of this flippening. I don't think it's a coincidence. It could be.
This is what people are saying.
I don't think it's a coincidence.
This is what everybody was talking about yesterday. If you don't like it, that's too bad, but that's what's going on. Listen, I think there was a combination of stuff going on, a confluence of maybe bad data, but this was at the forefront, period. Look at the banks. They completely came undone in 2 days. Can I show some charts now?
Yeah, what do you got here? What is this? Slide 2? No.
All right, listen, you could turn this into the Strazza show. I'm going to go buy stocks and sell, put on iron condors. Sean, I'm going to call you now. We're going to put on some condors, baby. Let's go. Adios, guys. Love you. Have a great weekend. YOLO responsibly. Look for the relative strength, huh? A little bit. Look for it. Just spend a little time. Look at the trannies. Look at the trannies. Railroads in Georgia. Truckers in Illinois. Just saying.
The All-Star Charts analyst team had like a 2.5, 3-hour meeting last night, just trying to figure all this out. We were on the phone all together from like 4 until 7.
Damn.
Yeah, and the big things obviously focused around one day doesn't make a trend, but one day can be pretty bad. What does it turn into? And then you have to start talking about and thinking about things like follow through, right? Like JC said, it's a sell-off. People are getting a little bit freaked. You do see the sentiment kind of turning. Is this it? And we rebound. Is this a good time to go in and enter? Or do we get downside follow through? Do some of these tops become tops is ultimately a good way to think about it. So I wanted to just share some of the tops that we've been looking at. I guess since last week. Spencer, you could start at the top of the deck, and I'm just getting one more chart ready to try to make my point very clear about what's going on. We've been pounding the table for how long now?
On the not a top.
Yeah, that these patterns are not tops. And I've also been saying eventually some of these will be tops, and that'll be huge information, right? Because we've been running this back for 6 months now, at least, Spencer, right? With this is not a top, that's not a top, this is not a top. Literally none of them have been tops. None of them have been confirmed tops. They've all failed. Eventually, we're going to start to get some valid topping patterns. That's going to be huge information. What I didn't expect, or I wouldn't have expected, I never would have bet on, is that the first valid tops were going to come from the early cycle leaders, literally the best stocks in the market.
From this group, from the Dells and the AMDs and the.
So it's one thing, say Spencer, a group of stocks, I don't know, throw out a group of stocks, Cyber, they got a thing going on with crowd. Say Cyber stocks started topping out and rolling over. So, okay, all right, right. Say like building materials for whatever reason, they start topping out, rolling over. Okay, right, fine. These are the best stocks. These are your market leaders. This is the AI trade. You don't want to see the AI trade unravel in an AI-fueled bull market, do you?
So it wouldn't be right to say, well, the first ones to lead the rally would be the first ones to lead the sell the correction. That wouldn't be right.
Not right, because it would be the weakest ones that should be completing bearish patterns because they're already bad. The good ones would have to do too much, come down too far to complete bearish patterns typically. But
yeah, that's true. They would have further to go on the way down.
So
it would take a lot more.
Pattern. So JC makes a good point.
What the hell?
A long time ago. Go back to
what are you doing here?
You guys thought you were done with me for the week.
What are you doing?
Super micro. You can.
I just got off the phone with Shawnee, baby. We're putting on iron condors in industrial stocks and in consumer staples. Not Coca-Cola, maybe the other one. Not Caterpillar.
Sean came on here yesterday.
The other one.
Sean came on yesterday and was like, I thought that action was pretty healthy after the Fed.
One more thing. You ready? Cinemark, absolutely ripping this morning. You know what we call that? Where I grew up, it's called relative strength. Adios. Have a good weekend.
I call that getting money. I just got a
Wait, hold on.
Because we love the juice.
Oh, that's nice.
We all about that juice.
That's a nice shirt.
Yeah. I buy things on the internet every now and then.
Yeah.
You know.
Anyway, back to the chart. So yeah, super micro. So yeah, obviously because it went up so much, it would have further to go to complete a bearish pattern.
Yeah.
Okay. So I'm with you.
So super micro peaked a long time ago. It's down 43%.
Yeah.
This is nasty, right? This is a real top. This isn't some little tiny multi-week top, right? Which we could draw on some other tech stocks like Nvidia. You could draw a cute little top. It's really not like a top that we should be concerned about. This is a nasty top. This has been distribution for a while now. This is breaking down right now. Go to the Micron. Same thing.
Oops.
No. Micron breaking down today. Go to the AMD. Again, AMD, maybe we can't call this one a leader. It hasn't been as good as some of the others, but Supermicro and Dell, definitely big time leaders. AMD breaking down from a top. Not good. You don't want to see that. It's one of the biggest semiconductor companies in the world. And then did we show Dell? We already showed Dell. They're all breaking down from tops. These are not the stocks that you would have assumed were the first to break down, right? You don't want to lose the leaders. Some would say they are shooting the generals right now. It warrants more caution than if we were seeing tops in like steel or copper stocks, or like I said, building materials, just some random group. This is a very important group. You don't want to see them trending downward while the rest of the market is moving up. That doesn't make sense. You want confirmation in the absolute trends, right? So we're getting all of these bullish readings from small caps over the past couple of weeks, and we're getting awesome follow through. These guys were just not agreeing, right? The big cap tech stocks, the mega caps, the mag 7s were not agreeing with all the bullish price action that we've been seeing and been saying about regional banks, biotechs, home builders, right? Now, what's happening, if you look at the last 2 days, look at just the last two candles in regional banks. Look at the last two candles in the Russell 2000. Look at today's candle in these groups. They are catching lower to those old leaders that were already moving lower over the past couple of weeks. Feel me, Spencer? We're always asking ourselves, who's right here? Well, it's looking over the past 2 days like mega cap growth and big cap tech and the AI stocks. They were right over the past few weeks, moving lower. Now small caps, regional banks, all the good stuff that has been good over the past few weeks is catching down rather than big tech catching up. Yeah, industrials are down 4.5% in 2 days. Look, you can go run a 2-day rate of change on any of these groups. It's ugly. 2-day rate of change, this is including today's data. At the open, we're down like 8% in 2 days in regional banks. It's the worst 2-day move since Silicon Valley disappeared. It's worse than First Republic, which was 2 months after Silicon Valley last year. It's not nothing. I can do similar things and show rate of change, extreme rate of change readings in, like Larry saying, things like industrials, probably ARC stocks, maybe even the Russell 2000. I do know that volatility tends to spike in both directions at turning points, at inflection points. So what happened a couple of weeks ago? We had massive upside momentum, right? Extreme readings in the short-term rate of change to the upside for some groups. And now we're seeing extreme readings to the downside for some of these same groups. It's typically turning point stuff. So look, I'm bullish, but the way this is shaping up right now, I don't think we should ignore. I think it warrants caution. I think it warrants our attention. We want to keep a really close eye on the damage over the past 2 days. I don't like the way that they've been selling the leaders for almost a month now.
But bottom line is, the alarming part is just how fast it happened, right? That seems to be what is at issue here. It's just is the speed at which all these things kind of flipped, right?
Yeah, dude.
It's taken 2 days.
Nasty.
Yeah.
Nasty.
Yeah.
Throw up. Okay, so like case study of the price action that we're seeing. If you follow my videos, if you subscribe to some of our products, pounding the table about this Merchants Bank Corp. It's so good. It's one of my favorite banks. I'm super long. This thing was up 15 straight days, longest winning streak on record. An absolutely relentless bid for this stock starting on July 9th and ending on July 26th. It was up every single session. 3 straight weeks. 3 straight weeks. The stock was not red. Zoom in, show the next chart. 2 days of price action, dude. It's all gone, right? That's not good. It's not how you want to see stocks correct. This is not normal corrective action. You get a wave, then you pull back, right? You correct 38, 62%, then you get another wave higher. You don't give back the entire move that came with breadth and momentum thrusts, right? We always say breadth is great, momentum's great, all of this stuff is great. Price has to confirm it. Price was confirming it up until the last 2 days.
How much of this is just
It's down another 5% today.
how much of this is just a function of the fact that it's August?
I don't
Volume
care.
is later.
These charts are getting shot in the face right now. I don't care what month it is.
Okay.
Price.
Yeah. That's you know, lighter volume, easier to push things around. All right. Just a thought. Yeah.
Listen, I'm not saying there's nothing there, but
Yeah.
it doesn't matter. Light volume, still don't want prices to look like this. Charts are falling apart. It's not good. We got to step in, make a save, repair some of this damage, because there's damage now to a lot of these tactical trends that can lead to damage to the primary trends. We'll talk about it more in the future as we see it. Not seeing any, damage to the primary trends yet, but we're moving in that direction, and we're moving quickly, like you mentioned, Spencer. Right? It's the speed or the momentum behind these downside moves, the way they're selling these things. What have I been saying for the past 2 weeks now? They're selling every rip in big tech, every single rip.
Yeah. I was just looking at that Nvidia chart, right? Which was it 2 days ago? What was Nvidia up 2 days ago? Like 15%, 10%, something? No,
12%.
Yeah. So
it was down.
if this was 6 months ago, there would have been some follow through there, right?
Yeah,
it lasted exactly 1 day.
There's a big change in character. There's a change in character to the earnings reactions. Meta crushed earnings. Stock was up huge. Then look at it. Melted all day. They just sold it all day, and then it was down the next day. Got no follow through. Right? So, this is just the kind of stuff that kind of shifts and becomes evident at market tops. I think we should be open to the idea that this could be a market top, at least for the market leaders. And that would probably mean the Qs. I heard Kenny say Qs probably peaked for the year. Looks that way. At least until November or December. We are at this point down.
Wow. Today's a super defensive day, except for crypto.
We're 12% off of all-time highs already. Coinbase crushed it, by the way. Coinbase is just, it wasn't nearly as good as last quarter, but these guys are just so good.
I don't know. Didn't their revenue double year over year?
Yeah,
Did I see that?
Yeah, but remember the story here. They make little to no money in bear markets, and then they make a ton of money in bull markets. So it's like bad comps. I would compare it to last quarter, and it wasn't nearly as good as last quarter. Last quarter was great, but hey, that's what sideways crypto markets.
Super defensive day in the stock market, but cryptos are all up. So cool. I don't know.
I think you buy Coinbase hand over fist here. This company's just printing money. It's doing a great job.
All right.
Really bright future. DraftKings is down 5%.
Yeah.
Struggling. They've been struggling for a couple quarters now.
What else we got? I mean, it's like there's nothing up. There were things up today, right? I mean, DoorDash.
Trying to flip it green. Can you read out the
staples, utilities, real estate, right?
That's the other thing. Yesterday, Spencer, what a defensive tape.
It's the same thing today. It's the same thing right now. We're 10 minutes into the day. I get that, but
on our analyst meeting, some of the guys were like, well, utilities and staples were up. I'm like, go buy them then. Who's running out with
Somebody is.
My dad's buying some utes. I'm sure of it.
Oh, boy. Yeah. Look, newsflash. We are all, I'm assuming, overweight technology. That's just how this goes, right? This is a feature.
Larry Thompson's drinking margs on the beach. That sounds nice, Larry. I wish I could come do that with you.
You can. Why don't we just hop out of here right now? We have no Alfonso today. We had no guest today. Our guest had to reschedule for a few weeks out. So no JC. So it's just me and you. So you want to just dip out and enjoy the bloodbath? I don't even know how serious to be about that.
Yeah, I do.
All right.
They're moving. Let's go take care of our business.
Go take care of business, everyone. We'll wrap it up here. Thanks for hanging out. This was a weird show. I didn't hate it. Just a weird show. Some parts were annoying.
We did okay.
That's all right.
Thanks,
hey,
everybody.
We'll be back on Monday. Come see us then. Have a good weekend. Go make money or go to the beach. Whatever you want to do. There's more than one way to enjoy life. That's it. Smash the like. See ya. Or golf.
I can't take no